The S&P 500 finally did it, hit a new all-time high. The analysis strikes again. Like I told you, I expect the election gap to get filled, and then leading into the inauguration, a rally back to all-time highs. So what happens now, and more importantly, what stocks am I looking to get into for long-term holds as well as swing trades? That is what this entire video is going to be about. I gave you guys the S&P 500, Nvidia, Tesla, Uber. You definitely want to stick around here. And before we get into it, I just want to say thank you guys so much. We finally hit 300K subscribers, and yes, this is around how much I make per month on YouTube. I will be doing a live stream this week and doing a bunch of giveaways just to say thank you. I'll be giving away merch. I'll be giving away a lifetime subscription to the Traveling Trader Trading and Investing Discord. Without further ado, let's get right into it. First of all, we're going to start with the SPY. Everything will be timestamped in chapters below because I respect your time. As I said, the S&P 500, I expected the election gap to get filled, and then I expected a rally back to all-time highs leading up to the inauguration and playing off of the exuberance that we saw before the inauguration, after the election. I shared with you guys some data on what happens between the election and the inauguration. And I said out of the last 13 years, only twice has this period been red, and both times we were already in a recession, which was Bush's first year in 2001 and Obama's first year in 2009. All other times were green. So I expected January to end green. Now, what do you notice about this pattern here on the S&P 500? What you notice is every time we V and dip into a correction and we come back up to all-time highs, we start to consolidate. You can go back and see this over and over and over and over again. Every time we hit an all-time high, we end up after a V correction, whether it's a pullback correction or bear market, there is a period of consolidation after we hit that all-time high once again. So you can see here, V correction, all-time high, consolidation, V correction, all-time high, consolidation, V correction, all-time high, consolidation, especially going into February. As I said, a lot of things are uncertain. Most notably, what is the Fed going to do? If you check my last video, I talked about what are the scenarios and what are the possibilities if the Fed is hawkish and if the Fed is dovish. And we have a Fed meeting on January 29th. Now, if you are in short-term plays only and you don't have long-term positions that you've been buying and accumulating for years and years and years, in my view, there is little upside to holding short-term plays through the Fed meeting. It is a binary event. It is at the top of the market here. We know that it's going to be a long ongoing battle between Jerome Powell and Donald Trump, where Donald Trump is going to try to dictate policy, but Jerome Powell is going to try to make sure that he stays out of it. He might cave in like he did before. He might not. He might be stubborn because he knows it's his last few years as the Fed chair. Who knows? But I think that if these rates don't come down, and this is the 10-year rate here, I think if it doesn't significantly break structure and start dropping to below 4%, I think that there's going to be a ton of volatility for the market for 2025. And I don't see it as easy as 2024 and 2023. All right, that's it for the little market update. January 29th, I'll obviously be live for FOMC and we'll see what happens then. All right, let's talk about the first stock, everyone's favorite stock here, Tesla. You can see that we broke out of the downtrend line. Now, this is a really important level. Why do you ask? Well, from November of 2021, previous all-time high. So this is a break and a retest here. And we need to hold this level here in order for us to maintain short-term bullish plays on Tesla. For me personally, before I open up a new batch of calls on Tesla, I want to see it break above this 4-hour fair value gap close. So I would like to see Tesla above that 435 level before initiating a brand new set of calls. Now, can you trade calls from here? A break and a retest of the previous all-time high? Yes, of course you can, especially because, we're still above this trend line. But I was already in Tesla calls and I'm looking to see if I can press those calls, meaning open up a new batch of calls or pile onto the ones that I already have. And I won't be adding until we confirm a break above this. But could you buy calls here with a stop limit below this level here, targeting recent highs? Yes, I think in my opinion, you can. I really hate seeing the way that most traders online trade. And I'm not talking about seasoned traders. I'm talking about most retail traders online, or most of you guys watching this, whoever my target audience is. And let me elaborate a little bit. I see this time and time again. I even see this from newer members in our Discord. They end up buying calls and then they just hold them. There are no levels. There is no exit plan. There's no take profit. There's no, okay, if this gets below this level, I will stop them. People are so obsessed with being right, and they're obsessed with hoping that their position works out, that they don't know how to cut their position. If you want to survive in this game and you want to be an elite swing trader, it's not about being right. I'm not right all the time. I'm actually right maybe 60% of the time as it relates to swing trades. The way that I stay consistent and profitable is because I'm willing to cut the losers when they go below a certain level, no questions asked. If my winners end up playing in my favor, I ride them to my profit targets. What people end up doing is they'll buy calls, let it bleed out till expiration for 100%, and that's it. And they do that time and time again. They might have an occasional winner, but the times that they hold their option plays is really what kills their account. That and buying really short-term calls because it's cheaper, right? So a lot of newer traders will go short-term and or out of the money and just hold those calls until they bleed them to zero. That's not the way to trade, guys. So for me, if you did buy calls at this level, previous all-time highs, it's fine the minute that we close below this area here. We will have shifted structure to bearish, and I would personally abandon short-term calls in that case and look maybe towards long-term calls, long-term leaps if we start basing out. The next stock that I'm looking at is Apple. If you look at the 200-day moving average on Apple, you'll see that is where we are nearing now. So Apple is moving entirely opposite of the rest of the market and the rest of the Mag 7. You can see that Apple right now is down about 15%, actually a pretty good area for dollar cost averaging for the long term. But in terms of a short term play, I want you to look at Apple when it hits a 200 MA and is oversold on the RSI. I personally don't use MAs or RSI when I day trade, but for swing trades, I use it. In a bear market, that's a different story. But in a bull market, this is a recipe for a launch. 200 MA oversold on the RSI. I personally would want to see Apple touch that 200 MA. It's still kind of far away from it, but I do think that there is a possibility for calls. However, I'm not going to blindly buy calls here. You can see this level on Apple, this level right here. At one point, it was all-time high. Then we popped above it, consolidation there, support there, and we are now at that same level. Once again, could you buy calls on Apple and have a pretty low risk trade? Yes, you could buy calls on Apple and abandon them if they get below 219. I personally am going to wait here. I think the momentum on Apple is super bearish, and I want to see what happens once it fills this gap, because essentially what could happen here, just like how if we have gaps on the downside, we could fill and move up, same thing here. If we have a gap on the upside, we can fill and move down. Now, again, this is not a long-term thesis here. For the long term, any mega cap stock that's down 15%, you can dollar cost average, especially in your long-term accounts, and just hold that stock for the long term. Basically, you'll be a rich motherfucker if you buy the mega cap stocks at the 200-day moving average. While this is a good level for a short-term swing, for me, I want to see what happens above this gap, because the really scary thing is that there is a major level for Apple when it hits the 200 MA. We see it sometimes fall below the 200 MA and stumble a little bit. We have this level here that is at 200 almost exactly. We can fail that gap and come down here. And so I'm going to be intently watching this, what happens with Apple. I cannot yet long it without seeing what reaction we're going to get to closing this gap. Nvidia, the #1 money maker. I gave you guys this time and time again for day trades, for swing trades, on the live streams, on these videos, obviously in the trading and investing Discord. We played this one to perfection. Currently up almost $11,000 in my swing trading position on Nvidia. And then in the public account, this is the account that I share with you guys, that I take trades with you guys publicly. You can see that we're up 53% on these March 21st 135 calls. And if you guys have never heard of public It is by far my favorite platform. It's based in the US, regulated broker based in New York, and it is also contract or commission free. Not only that, but you get rebates on your trade. So it is better than commission free. You also get to ask its AI any market related question, like compare Nvidia and AMD financials. And you can see it pop up, giving you really convenient, fast information here that helps you make your trading decisions and your investing decisions a lot easier. So it gives you a nice, concise breakdown of all of the numbers, the ratios. It even gives you comparative insights in terms of its market position, valuation, etc. If you're in the US or you're a US resident, you have nothing to lose. Sign up for an account on public, use the link below. But my thesis for Nvidia, basic break and retest here, you can see that this level on Nvidia, this is the weekly chart, is very important. So this level is where we found resistance before, and then we found support before. And what did I tell you guys? On his way out, Biden renewed some sort of congressional chips limitation to China. And there was that negative news where you can see here it hit all-time high and then hit the 50-day moving average on the same day. This was actually the second time that it happened. I found a time in 2005 that it happened, and Nvidia then made an all-time high once again after that. So I figured that, you know, with Biden on his way out, with Trump on his way in, that Trump already said he was going to ease AI regulations. We already saw that with the Stargate project, which was announced yesterday as of the time of this recording. So not only is this an important level for Nvidia, it was just a simple break and retest buying calls here, but also from a fundamental perspective, there was reason enough to buy Nvidia as well, knowing that Nvidia would likely benefit from a Trump administration. Now, if you're not in Nvidia short-term calls, I think it is too late here. I think you're going to have to wait for a pullback to at least this level here around 140. But I do think Nvidia is going for these equal highs here at 153 and will make new highs. And of course, Nancy Pelosi bought $500,000 in Nvidia call options in January. But as you know, my target on Nvidia is 163. It is now the most valuable company in the world. I do think it'll hit a $4 trillion market cap, especially with the massive AI build out that is going to happen, in my opinion, under the Trump administration. Like I said, Stargate project is well underway. This is going to involve Nvidia, ARM, Oracle, as well as some other companies. We haven't even started to scratch the surface on the potential of AI and the AI build out that's going to happen in the US. I think hundreds of billions, if not trillions of dollars in the coming years are going to be spent on AI and AI build outs. And what I'll be focused on are companies that are basically metaphorical shovels in the gold trade or the gold rush. The people that sold the shovels made the most money. So in my opinion, yes, you're going to have Microsoft, Google, Amazon, Apple. You're going to have all these companies competing, Meta, but they're all going to need chips, and no one can scale at this point like Nvidia, as well as companies like ASML and Applied Materials, which is why I'm invested in ASML as well. Made a 3-month high today. And as of now, I don't have any short-term plays on ASML. I do have leaps on it, but in the short term, I don't see an opportunity here because we are at a very pivotal level on ASML. So I need this level to be broken and potentially retested in order for me to enter shorter term calls. All right, one other company that I've talked about before that you guys have made money on before is Uber. Looking pretty juicy here for a breakout. Uber is another one that I gave you, still holding the 65 calls expiring March 21st, up 45% on these, a little bit down today, just 30 bucks, but up 45% on these calls so far. Now, Uber, I've gone over from a fundamental perspective, so I'm not going to spend too much time on its fundamentals here, but Uber is a cash cow. It has one of the best cash flow turnarounds that I have seen, sitting on $6 billion in cash right now. But from a technical perspective, I really like Uber as well. So I was waiting for this gap here to get filled on Uber. And once we filled this gap and this drop here, a huge portion of it was due to the robotaxi rollout. Tesla's robotaxi would hurt Uber, but Uber is working with Nvidia on its own robotaxi. took advantage of this overreaction here. Looks great from a fundamental perspective. Hit our level here, which was the gap fill, and we saw a jump up and we got in on this retest of this gap fill here. And we now see that Uber created another gap up and we are now retesting it. So I think that Uber will continue to trickle up. I don't think really short dated calls are optimal for Uber because it can take a long time. So I think you have to go at least a couple months out. And it is also a low risk play because you can set a stop limit or exit manually when we get below this 64.50 level. But I think there is a nice opportunity on Uber at this point on this little pullback here to get to 70 and above. A lot of you ask me about AMD, and here are my thoughts on AMD. I don't hate AMD. I hate AMD's chart. Also, I don't think AMD fundamentally, I don't think it's anywhere near Nvidia. I don't know why those two companies get sort of compared. They are nowhere in the same stratosphere. Nvidia is almost $4 trillion. AMD's worth less than 200 billion. It's not even in the same stratosphere, but that's neither here nor there. From a chart perspective, I really hate AMD's chart. Now, I do think that a breakout can happen and it can be an easy-ish play. So say we break out of that downtrend line and we retest this level here. This right here will be called a breaker because it is the level or the order block that allowed us to break market structure above. So if we retest that, there could be a bullish play on AMD, but I do not think that AMD right here is a bullish play whatsoever yet. And again, I'm not talking about from an investment. We're only talking about trades. One stock that I am watching here is Costco for a short-term play. Look at this level. This level is extremely important on Costco. This level right here was resistance, support. We broke above and we are now testing it again. Now you can front run a long here on Costco. By the way, if you look at Costco from a trend line perspective, you can see that it is riding this trend line pretty well. We are still in that trend line. And if we pull up the moving averages, you'll see here that we are sitting at the 100-day moving average as well. So there is a lot of confluence here for this breakout in the short term, and you can play long dated calls on Costco relatively risk-free. Also, dollar cost average candidate for sure. Costco is a great company and it was down from highs somewhere around 10%. So definitely in correction territory, could dollar cost average here. But I think that this setup looks ripe for calls. And last one I'll give you here, there is a sleeper pick that we're looking at here in the traveling trader trading and investing Discord. And this is SMCI. This can be a big play here, but it is definitely risky because their last auditor, Ernst & Young, left them. And they have a new auditor now, but this new auditor, BDO, doesn't have a great track record, to be honest. You can look that up yourself. But if we take a look at SMCI, we talked about the Stargate project infrastructure, right? SMCI is Nvidia's third largest customer. And with this new AI build out, if you look at what SMCI has in store with regards to AI, SMCI are building out these servers and server racks that support AI infrastructure. So they're able to connect 100,000 NVIDIA Hopper Tensor Core GPUs, which is an insanely massive scale. So if you imagine a world in where these server racks, etc., are going to need to scale, and these companies that are doing research and development and building out these AI systems and these AI models are going to need massive numbers of GPUs, and they're going to need to store these GPUs in these racks, keep them cool, etc., so that they function optimally. This is what SMCI is. A lot of people think that SMCI is a chip company. It isn't. So really important company that took a hit because of some shady accounting practices. And we see it now going from a bottom of 17 to about 33. If you look at its compound annual growth rates, top line, bottom line numbers, you could take a screenshot of this and look at it. But SMCI for the last 10 years has been growing at a crazy pace. And like I said, with the AI build out is probably going to grow. There's only positive growth from here, but we haven't yet broken out of this downtrend here. Their deadline for NASDAQ filing is February 25th. If they can get that under control, I think SMCI will break out once again and see a monster rally. I'm willing to take the chance on SMCI if we get a breakout out of here. It is reporting earnings February 4th, so we may hear an update on that NASDAQ filing. But if you look at its current IV percentile, it is very low here comparatively to where SMCI normally trades. It's only in the 38th percentile. So I think this could be a sleeper pick here. Obviously, they could totally whiff on their accounting and we could see SMCI tank. But basing out here, if we get a breakout above this trend line and we get some good news regarding their accounting practices, SMCI will be a part of this AI build out and we could see a monster rally on it. Another thing that I like about it is you can see this wave of buying came with a ton of volume. Look at this selling here. There's barely any volume on the selling. This is usually a recipe for a big breakout when nobody expects it, especially as it's been sleeping for over a month here in this consolidation. So paying attention to this one heavily to see if we can get a breakout from here. Anyway, traders, that is it for this video, old school video showing you the top stocks that I'm looking at right now. If you found this helpful, give it a thumbs up. Let me know in the comment section which of these stocks you are looking to buy, which are you already in, which are you bullish on, which are you bearish on, what stock are you looking at that you would like to put on my radar as well. Thank you guys so much for 300K subs. I appreciate you. Look out for details of that live stream where I'll be doing a ton of giveaways on memberships, merch, etc. If you want to join the Traveling Trader Investing and Trading Discord, link is in the description below. If you're only interested in long-term plays, we try to keep it fair at $35 a month. So join the investing only tier if you're not a swing trader or day trader. Otherwise, if you want these swing trades and you want to day trade live with me, there is that tier as well. Get yourself a public account, subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.